What's going on, YouTube family? Welcome to Automotive Life. My name is Lucky, and today we're going to be talking about the auto loan crisis. Car repossessions are surging, a troubling sign for the used car market. New studies conclude that car repossessions are on the rise. Car debt piles up as more Americans struggle to make payments. Car repossessions grow as Americans struggle with high car prices and inflation. High interest, late payments, repos, car loans are going bad places. Auto loan borrowers are feeling the rough economy through bigger payments, some of which are struggling to make. Now, I can go on and on about this. I can read you tons of articles now that the mainstream media is finally caught up to what's going on. Now, we've been screaming this from the hilltops for the last 2 years. During the pandemic, we saw the first issues of what's going to happen with the auto loan crisis. Now, let's go ahead and rewind the clock back to 2020. This whole auto loan crisis started back in 2020. Now, when the pandemic first started, the first few months when everybody was shut down, dealers were extremely scared because they had hundreds, if not thousands of cars on their lots, and they didn't know what to do with them because nobody was buying them. So they started negotiating with banks to make certain deals and certain programs to help them get rid of some of their inventory. I've seen stuff with zero interest. I've seen deferred payments, 3 months, 6 months, some up to a year of forbearance on payment programs, just so these dealers can liquidate some of their inventory. I don't know if you guys remember this. This was about 3 to 4 months before all the stimulus checks started hitting. I remember it was just like clockwork. We were sitting there, nothing going on, and all of a sudden we started getting customers just coming out of the wazoo with $10, $20, $30,000 down. People that were getting their unemployment and their stimulus checks predated for 4, 5, 6 months, and they just came in and started buying everything. Well, all of a sudden, the supply and demand completely switched. Before, dealers were just giving away cars just to get them off their lot. All of a sudden, we couldn't get new cars. The auctions were closed. A lot of the major manufacturers, their supply chains were closed. And so all of a sudden, any car that was in the market, value started shooting up. We were going around actually buying cars from people, turning around, bringing them on the actual dealership lot and selling them for more money. The critical point happened when we started selling cars for more than what they were worth. I'll never forget it. We were sitting on the lot. We had, I think it was a 2018 Nissan Sentra. It had like 30,000 miles. I think we had it up for like 11.5 cash finance. And I remember this was our last newer car with lower miles. All of a sudden, we got a call from somebody in California that said, hey, is this 11 something? Yeah, I'll give you $15,000 if you hold it for me. We laughed, didn't think he was joking. He ended up selling us $5,000 for the down payment. He showed up, financed the rest through the bank, and the rest was history. We ended up making even more money than what we thought on that vehicle. And that's when I knew that was the beginning of the end. Are you tired of feeling like Big Brother's watching your every move online? Well, say hello to today's sponsor, Private Internet Access. With over 30 million downloads and over a decade of experience, Private Internet Access is your most transparent VPN provider. They've earned an excellent rating based on over 8,500 Trustpilot reviews, so you can be certain that they take your privacy seriously. Private Internet Access isn't just about keeping your data secure, it's also going to open up a whole new world for entertainment. With their VPNs, you can say goodbye to all the geo restrictions and say hello to streaming all your favorite shows all across the world. And since it works with all streaming services, you'll have access to more content more than ever before. Private Internet Access is seriously so simple to use. And so they're offering my users a special discount only for a short time, so make sure you use my link down in the description today. And if you change your mind at any time, they offer a risk-free 30-day money-back guarantee, and they offer 24/7 customer support. Don't let anyone take control of what you do online. So choose Private Internet Access and take back the control of your life online. Now, dealers were so desperate to get more inventory, they started paying record amounts of money for used vehicles. So if a car was traditionally worth $15,000 retail, we would buy it for maybe $12,000. Well, now dealers are going out and paying $15,000 for a $15,000 car and then trying to retail it for $19,000. And this is where everything started to turn for the worst. Dealers started asking banks to finance more money because they couldn't buy the cars for what they were actually worth. They would show the slips from the auction house, they would show what's currently going on in the market, and it allowed the banks to slowly up their prices and amount financed. So they would come in and say, you know what, we won't do 120 on this car, we'll do 130% LTV, 140% LTV, 150, just going up in traditional numbers. And that was the first rule that banks changed to start the auto loan crisis. Traditionally, the way it worked is if you had really good credit, banks would give you 120, 130, 140% LTV on a vehicle, which means loan to value. This is for well-qualified customers that want to buy a car with zero money down, get all the bells and whistles, and then throw on maybe an aftermarket warranty, some paint protection, and whatever else they want to do. So this way they can add it all on there and then the bank completely finance it. Well, they started changing that not only to tier one customers, prime customers, they started doing it for subprime customers as well. And that was the second rule that the banks broke that started the auto loan crisis. So this was the first time in history that a subprime borrower can have the same programs as a prime borrower. This led to people buying V6 Chargers at a dealership for $10,000, $15,000 over MSRP with minimal down payment. And what's even worse is now they paid all that money for it and they got whacked with another 15, 16% interest. So these people are literally buried in their cars. So that's why you see so many subprime borrowers with $1,000 monthly car payments. This is exactly why. And this is one of the other things that started that domino, which is leading us down the road for the auto loan crisis. Now, the biggest thing that made the auto loan crisis happen is a failure to do proof of income. 90% of the auto loans that were originated in 2020 through 2022 did not have verified income, according to Experian.com, which is absolutely mind-blowing. This shows that banks literally turned a blind eye and just lent as much as they possibly could to people that traditionally wouldn't qualify for it. What do I mean by this? If you came into my dealership and you said, hey, Lucky, I want to buy this car, I'm going to ask you for pay stubs, bank statements, something to justify you buying the car. And this is how we figure out what your monthly payment is, your DTI, and that's how we structure your loan. Now, what happened was we had all these stimulus ballers that were coming in with $20,000, $30,000, $40,000 down. And I'm not even joking when I tell you $40,000 down. There were some families that had insane money. They were coming in and buying these cars. And when you put a big enough down payment, a lot of the dealerships didn't really care. And a lot of the banks didn't care that they had to do proof of income. Now, traditionally, before the pandemic, even if you brought me $20,000 down and I saw all that money, I would ask you what you did for a living. If you went from making, let's say, $10 an hour working a Jack in a Box, and then all of a sudden you're making $4,000 a month from unemployment and stimulus, that would not count as verifiable income. We would just base you off of what you made before, which you're going to go back to, which is your Jack in a Box income. But what happened during the pandemic is they didn't do that. There was no justification on showing why these people went from $10 an hour to, $4,000 a month. And so many people just started jumping in there overpaying for cars. And what made it even worse was this was during the pandemic when everything was shut down and people were not paying their rent. So now we have people that could barely afford a $1,000 a month car payment and they were paying really high insurance even though they couldn't afford the car. Now, fast forward to 2023. Where are we at now? Well, the rent that costed, let's say, $1,700 back in 2020, well, guess what? It's $2,500 a month now. The car insurance that you were paying, let's say you're paying $600 a month for your full coverage car. Now you're paying maybe $680, $700. Everything has pretty much gone up or doubled since 2020. So now you have people that simply cannot afford their car payments. Now, traditionally, this wouldn't be a big deal because there's always banks, what's called buying and selling paper, where little by little, every bank spreads some of their bad debt through all the other banks. We don't have these issues of massive repos. But now we're at a certain point where banks are not buying auto loan portfolio. This is something that I saw about 9 months ago. And this is what alarmed me the most. And this is why I keep saying that the auto loan crisis is much worse than any of you guys are even thinking. Banks were out giving so much money during the pandemic for cars that simply weren't worth it because they didn't care. They were buying loans, holding them, which is like big companies like Ally, Wells Fargo. They would keep most of the loans, but they would sell off handfuls. Now, you may be asking yourself, Lucky, why would they want to buy loans that really weren't worth it? Well, the way banks work is the more money they lend, the more money they receive to get more money to go out and lend even more. So even if the loans temporarily weren't that great, they would just bundle up the ones that weren't performing well and they would sell them off to somebody else. But they had those numbers saying that they got, $30 million in loans this month and they need another 30 million for next month. And they can just keep growing their book of business. Well, what happened is now imagine a game of musical chairs. Everybody's paying this really bad auto loan portfolio and it's going around between all the banks. Well, now none of the banks are buying. We're just waiting for the music to stop. Whatever bank is held with the worst amount of paper, which is probably going to be either Ally or maybe Credit Acceptance, something like that, is going to be really ridiculed by the media, as well as I'm sure some other financial institutions, because they're going to show all the flaws when it comes to lending. Now, the reason why this is such a big deal is as we start progressing and the market is slowing down, we had a temporary spike for tax season. Don't worry, don't get your pennies in a bunch. I promise you the prices are going down. They've already dropped 3% this week. In 2020, that's when all the prices started to change. If we go to the peak of 2021, car prices were 60% higher than what they normally traditionally were. People were way overpaying for cars. People are going nuts. But since 21, we've been on a steady decline of car values. Now we're looking at about a 30% drop from where we were at the peak. Now we're still 20 to 30% away from prices being back in 2019, but we're slowly getting there. But what does this mean for the consumer and why is this such a big deal for the auto loan crisis? So let's say back in 2021, you purchased a Jeep Wrangler and instead of paying, let's say the $50,000 MSRP, you paid the $20,000 over MSRP because you were desperate and you had to get that Jeep Rubicon that you really, really wanted. So now you're into this car $70,000. Let's say you put 10 grand down. You're a good person. You put 10 grand down. Now you're only $10,000 upside down. So fast forward to today in 2023, what does that mean for the car value of your particular vehicle? Well, maybe that Jeep Wrangler now is worth maybe $45,000. So now you're $15,000, $20,000 upside down in that car. What are your options? You can't trade it in. You can't refinance it for lower interest because you're pretty much stuck because you owe more than what it's worth. So you have to put a big chunk of money down, but you can't because your rent's doubled, your mortgage has doubled, interest rates have gone up, gas has gone up, insurance has gone up, everything has pretty much gone up. And now it's simply just not affordable. What are customers' options to do? Walk away. And that's the thing that's scaring people. There are going to be a lot of people, I believe, in the next 6 to 8 months, they're going to be walking away from their cars because when you can go to a Dodge store now, and you can look at all my friends on YouTube, a bunch of these guys made videos about how Dodge and Chrysler have the most inventory right now. If you can go walk onto a dealership and get a Jeep under MSRP now for cheaper than what you actually owe on your 2-year-old model, why would you keep paying that? You could just go get that new model and let the old one go. And by the time you pay off this other one, your credit will be good to go and that other car won't even matter. And I believe this is what's going to happen. And this is going to start people from pivoting to paying all these crazy overpriced vehicle prices to getting into something that's maybe a little bit cheaper. And this is going to be another domino that's going to fall, that's going to lead to an even bigger auto loan crisis. Just like the housing crisis back in 2008, where people were just walking away and giving their keys to the bank because they were $100,000, $200,000 upside down in their homes. When people are $10,000, $20,000, $30,000 upside down in their cars, best believe they're going to walk away. Now, if you've watched my channel for a while, you've heard me say that there's multiple people that did some really stupid deals. And we're not talking maybe just a few, we're talking hundreds of thousands of people that did stupid deals. Stupid deals, what you may ask? How about paying $40,000 more over MSRP on a Toyota RAV4? Paying $100,000 more on a G-Wagon? Paying $150,000 more on an S65? There are tons of people out there that paid stupid amounts of money over MSRP for cars that they simply can't afford. When you pay $40,000 more for a Hyundai Palisades, and now you can see that exact same car, better features, lower miles than yours, used for a fraction of the price, why are you going to still pay for your $80,000, $90,000 auto loan? People, I'm telling you, are going to walk away from their cars, and it's going to be much, much worse. And as all this debt starts to pile down, what's going to happen is banks are going to be desperate to liquidate these cars once they roll to the auction. So what does that happen? As repos pour in, more supply comes in, which means demand drops, which also means prices drop even further. And now what's going to happen is you're going to have this circle of pricing where Bank repos come in, they're going to be desperate to sell them, they're going to sell them, prices are going to drop, and then banks are going to have to be even more desperate to sell their next cars because the value is going down. And every month you hold on to your car values are going to go down lower and lower, which means that as people basically start getting rid of their cars, the people that are making their payments are going to be stuck with even more upside down equity. And this is where I come to the point of people not being able to afford their cars. The auto loan crisis is going to be much worse than what you're thinking. And the way people are buried now, they're not going to be able to buy cars for the next 2 to 3 years minimum. So dealers stole their future. They robbed their future of car sales to bury people and cars today. And all this is going to culminate into this massive issue of people not be able to afford these cars. And this is extremely scary. And when this auto loan crisis hits, I'm telling you, it's going to have major ramifications. I pray to God that the Fed or somebody else doesn't step in, because once the government steps in, they're going to put some regulatory things out there, and this is what we don't want. I know people are like, oh, you got to regulate the dealers. I'm telling you, if you do that, 90% of you guys out here watching this video right now can technically not afford your cars. Just like you could pay $3,000 a month in rent, but you can't afford a $2,000 mortgage according to the government. It'll be the same thing with cars. You want a brand new Mustang? Well, technically, with your price structure and what you have in debt, you can afford a Kia. That's all you can get. So you do not want the government stepping in, regulating auto loans and dealers, because I'm telling you, that is a recipe for disaster. So anyways, I would love to hear your comments and thoughts in the comment section below. Let me know what you think as far as the auto loan crisis, how it's going to affect you. What do you think is going to happen in your market? Or also, what's going to happen to the banks? And do you think the government's going to step in, bail them out, and hopefully not add regulation to us? But anyways, I want to thank you guys so much for watching. I apologize. I'm sick. My voice is a little weird. But thank you for sticking through this, and we'll see you next video.